Hello to you all. After a long period of waiting, I believe I finally came up with a better solution, I would say, for the most inconvenient killer that we have, with the crypto market and especially with the trend strategy, which are the sideways periods, and the rage market period. So in this case, I went back, I would say to the origins by taking just the initial volatility main strategy, which I have developed already 4 years ago, more than 4 years ago. And to that, I was looking strictly at the volume in this scenario, at the volume measurement. And in this case, the not just the volume by itself, but better said, I'm looking, at the accumulation between the short side and the long side, and I compare these, based on a percentile. And I am looking, where is this accumulation right now based on, for example, last year or last month or last 3 months, last 6 months. And all of these parts, they serve, I would say, like a certain percentage within that big picture. So we are going to have initially, an explosion on the volatility with our own calculation methods. And after that, this is to be like the first parameter and the first condition. And the second one, like I said, after that we are going to look into these accumulation periods for the volume. And this scenario, you can see that these volatility settings are more or less similar with the ones we have in the calculus MTF. We have the length and the multiplier. These are going to be the bands, these are going to be our bands that are going to represent, where we are in this situation, so nothing new there. However, I did change because, like I said, I'm trying to make it much more accurate in order to remove, this fake wording which we had, with the other version of calculus. But yeah, and at the same time, I'm trying now, within the strategy itself to have the alert as well. So I have added this part here. And then we can see that we have these accumulation volume models, and we are using either the OBV, either the CVD, or either the price volume trend. This is cumulative volume delta, this is price volume trend, and this is the OBV. Even though we are going to use a main initial model, so let's say for example in this case we are using the PVT. Internally, I'm still using a small percentage, for the filter, with the other two as well. So yeah, and this it would be, in this case, taking into account that most of the times we are more bullish than bearish, I'm looking, for a continuation for the long, and in this case for the short, I'm looking for an explosion. So in this case, these candles are telling me this explosion. Like in the last 5 candles, we have a big explosion towards the bearish side, or in the last 50 candles, we have an accumulation, for the bullish side. But yeah, even though it's 50, I still use it like an exponential mode. So in this case, I make use of the most recent candle values, and I assign them the biggest weight. In this current stage, this strategy, I didn't put into it any risk management, like traditional risk management with percentages for stop loss or take profit or things like that. So it's exiting purely on the condition, so yeah, you have to be a little bit careful with it. And also, I change in this case the monthly performance table. So in this case, we can see exactly the true drawdown which we have for the entry, and actually, the true profit or the true loss which we have, for the each trade. So let's take for example in consideration, like look for example in this trade in September. You can see that, from so September 23. So you can see that we enter on 23 and it appears zero until 2024. So if I have to take this trade, you can see that this 64%, 60 as much as it is, it would be this part coming from here. So it's taking into account all this accumulation coming, from these points, until here. So yeah, this is one of the biggest change. Now at the same time, now I'm looking inside, for a little bit more data, like when is the max drawdown, how much it is, the drawdown, and you can see like a difference. If I have to show the other one, let's see the original calculus. You can see that, for example, in 2020, so when it's a big bullish year, or better say beginning of the bullish year, like we had here, you can see that calculus initially won us, the MTF version. In 2021, we can see that more or less they are equal. In 2022, when it was a full bearish year, in this case, we can see that more or less, it's still superior the MTF. However, if we were to take, these 2 years, especially, this, for example, look at these 3 months here in 2023 and these 3 months which you have here in 2024, they are disgusting, and I know that for many people this seems, being 30% or 40% of your capital down, it's very painful. It's extremely painful, and most of you are going to, they are going to stop using it entirely. Even though after that, for example, like in last year in October, you are going to get a movement and you recover everything. But yeah, it's very, very, very painful, to take all of this. So, in this case, that's where, this new product is going to help. So, for example, you can use it at the same time, you can use it directly, as just by itself, because you can see that the main difference in this case, it's extremely safer. So we are going to have a 70% profit compared to a 44 which we have with MTF. Our general profit is also going to be higher, almost twice. The drawdown is the biggest difference here. So in this case, we grow from a 36% drawdown, we go to 11. This is huge. And then, like I said, because we have such a low drawdown, we can also go with the leverage. And if we're going to leverage, we are going to be able to beat these numbers which we initially see here. And you can see the same situation in this case, for the Ethereum. So you can see more or less the similar. If I were to take, from the MTF, again, we have a 50%, 52,000, 50% win rate, 33% drawdown, and with our product we are going to have 75% win rate, more than twice and a half the MTF product, and also, a relative very, very low drawdown. And this is going to be achieved. Look at the biggest difference. Instead of 122 trades, now we are having only 37. So yeah, this is we reduce, the amount of trades by 70%. So we are going to look in, at this continuation, and that's why you can see that most of the times, the trades are not, unless for example we're going to have a situation like this, where we've been 12% in plus and we ended in only 1%, so something like this. We have to be careful. That's the thing, and especially with the short side. In general, if we are going to go with the long side, it's even safer. I like it. I like it in this case even more, because you can see we have 75% accuracy on the short, and in this case we have 66, for the, sorry, it was for the long, and 66, for the short. So short, it's a little bit more fucked up. But yeah, overall you can use them both. Definitely that's how it's meant to be. And like I said, the biggest difference are going to come, when we're going to have these periods of undecidedness and uncertainty. Regarding on how you have to make the strategy alert, so in this case, you go on the chart, you have to be on the Coinbase chart on the BTC USD. We are going to have here the messages, for the long entry, long exit, long short, short message for entry and short message for exit. And once we have all of this, we are going to make another alert. We are going to write here to check it, that is going to be our silo strategy. So in this case it's calculus range market strategy. And here we will have to write strategy, order, alert, and with the dollar columns. So when we are going to do this, when we are going to write, that dollar alert message, sorry. So yeah, the correct one is this one. Strategy order, strategy point order, point alert dot slash underline, what's called this one, message. So yeah. When we are going to do this one, when it's going to enter, for example, in a new trade, it will automatically, print the For example, in this case, to print the long entry message and the close short message. Here, for example, it will print the close, the entry short message. Here it would be close short and entry long at the same time, because sometimes the exit of a strategy can be the entry of another one. Or in this case, we can have a situation like this when it's directly reversed. So you can see in this case that we enter directly in the short, taking into account that short can be the exit of the strategy. In this case, for the long entry. So yeah, this is more or less the data about it. If you have any question, you can always let me know. And yeah, thank you all for watching, and wish you all a great time ahead. Bye bye.